This is the international arbitrage on the 8th of October 2023, and today we're at Paradise Beach in Barbados, and we're talking about raising funds in the US. If you're an owner-manager and your business is less than $100 million a year, you're trying to raise less than $100 million a year, then essentially you should be using an international private investment fund. You should be using an international private investment fund because you, especially if you're raising funds in the US, because US investors are used to and require relatively high levels of investor protection. And when they compare domestic investment opportunities with your international opportunity, they perceive a lot more risk in international non-US opportunities because, of course, the US system does not apply outside of the borders of the United States. And your opportunity is going to be something like an oil and gas well in Colombia, or a mining project in Brazil, or something else of that nature. So you need to give thought to how you can set up your private investment fund in such a way as to generate more investor protection for US investors, which means you will be successful and face less objections to raising money for your international project in the US. Now, 3 weeks ago, the US SEC has issued new private fund advisor rules. These private fund advisor rules grant much more than previously was available investor protection to US investors. So investor protection is now much higher in the US for US investors, and this is going to become a challenge for international owner-managers who are raising funds in the US from US investors. Now, in other videos we have explained reasons or ways of increasing investor protection for international private investment funds where the underlying investment is outside of the US. These include captive insurance, employee benefit trusts, remunerating key employees and employees in the US, using US service providers like custodians, using US fund administration. You have to use a US broker-dealer because you're dealing with US investors. And so many of these things can increase the amount of investor protection that you are presenting in your offer memorandum to you potential US investors. However, there are two challenges for the owner-manager. One is to retain enough control over the operation through the fund so that he can carry out what is a operational investment. And the potential for misunderstanding and miscommunication is great because you are dealing with US investors who may or may not have deep and frontline experience in the organization and in doing business in the jurisdiction in which the opportunity is based. It may be a compelling proposition, and so therefore US investors definitely undertake the opportunity, but they simply may not have experience of doing business in that jurisdiction. And so therefore, by having a captive insurance and employee benefits and all these other connections in the US, the owner essentially, who also can retain funds in the US, is going to be subject to the US jurisdiction. Now, many owners, many people in Latin America retain funds in the US. They accumulate funds in US banks, US private banks, and I'm talking about funds for their family, funds for their business. And so all of a sudden, if you have US investors and high levels of investor protection, fiduciary obligations to US investors, if your accumulated wealth and financial assets in the US are not held within a suitable asset protection trust, if you have a revocable trust or some other type of trust in a jurisdiction that might be able to be easily set aside at court, then you of course are running a serious risk, because it is very possible in the US to run into legal problems with investors. There's just an infinite number of ways that this can occur. We will talk about some of the most likely ones, but essentially we'll just assume that it is possible. And so you need to pay attention to asset protection. So yes, use asset protection trusts in the US like South Dakota, Nevada, Delaware, but also think about placing some of your assets outside of the US in jurisdictions, in a trust in a jurisdiction like Nevis, Belize, which can very much help keep you liquid, keep you alive, maintain access to funds so that you can engage lawyers and do what you need to do. It is crucially important that you guys think about this before you start structuring your investment funds to be based in the US, because once you start this process and you set up in the US, it will then be too late to set up trusts after something happens. So any owner-managers raising less than $100 million from US investors, speak to your lawyers about asset protection. If you have private banking relationships and assets custodied in the US for your family, as soon as you start to take on US investors, your dynamic has changed, the balance has changed, and you need to speak to your lawyers about asset protection in the US, and if you're smart, somewhere outside of the US jurisdiction. So that's it on that point for raising funds in the US from US investors.